Good. I like
This
doing these
meeting
things
is being recorded.
on Fridays. Fridays are good.
How is Hey Council? We haven't talked to y'all in a while.
I know. It's been I feel like our cadence is pretty good. We're yeah, sorry, I gotta approve all these robots. We're doing this like what, like once every quarter, feels like. But
Yeah.
things are good. Things are good. We're building, we're doing a lot of building behind the scenes, trying to make some stuff that we think the community will really like. So a lot of cool stuff underway. A lot of stuff we'll announce probably over the next month or two, and things are good, I think. How's everything on your end?
Good, good. Figuring things out internally, bringing on new clients, playing around with ChatGPT every day.
Yeah. Have you even messed around with the new GPT-5, have you? Or that hasn't come out for like normal folk, or has it?
Yeah, yeah, I think it's come out on ours. I think just today actually. I saw it come up in Lovable, but I haven't like played around with it actually. Um, any reports on your end from it?
I think a couple people are playing around with it, but I haven't touched it yet. I'm just, I don't know, busy. But yeah. But yeah, hearing cool things. I mean, it sounds like it's just, a step up, but at a certain point, all these things just blur together. I don't know what to do, what to use, what to trust. But
Yeah, yeah, and especially in your line of work too, like trust is a huge part of it. You have to trust your tools, and people are trusting you to have the right tools. Same
yeah.
with us. Um,
Is it big like in your field, or are you using a lot of sort of AI based accounting tools, or is it mostly still kind of the traditional stuff?
I think accountants are hard to get to adopt new technology, and a lot of our systems are fairly antiquated, and so much is numbers driven and like spreadsheets that aren't necessarily as tokenizable for LLMs as other types of data. And so I think we haven't had like the sort of that AI spring like a lot of other industries have. I hope we will soon, or maybe we will. Um,
Mhm.
but it's I don't know. I
Yeah.
I think our industry is struggling with like exactly how can we use it. And so we tend to be negative kind of people. Oh, well, it can't do blah blah blah, therefore I can't use it at all, as opposed to seeing it for like what it can do,
Yeah.
right?
Yeah. I think we struggle with similar things. It's a little bit more exact science on your end, so certain things are clearly wrong that like, and you don't have much room for error. So I imagine there's just sort of a hesitation to dive in until you know it's going to be exactly correct.
Yes. You still don't use it for anything that must be right.
Yeah. Cool. Well, thanks everyone for joining. I'm sure some people will trickle in as we go on, but many of you already know the team at Agate. It's Allison McLeod and Sarah Harris, and they are an incredible tag team duo um, that comes on every now and then to help us sort through some top of mind Q&A. Also, they work with a fair amount of Hay Council attorneys with accounting and bookkeeping and tax services, and so they're definitely a trust one of our only few kind of like really embedded trusted partners, and we love them. And so I always love to come and do these things and give them the floor and have them answer questions for you all. So without further ado, I'll pass it along. I know there's maybe a couple things we want to take off the bat. Um, so maybe we should start with sort of like the new tax developments from the new administration, and then we can go from there.
Absolutely. Sarah, do you have that little one pager for
Yes,
us?
I'll drop it. You want
Yeah.
me to drop it in the chat or you want to share it?
Oh, that's a good question. Maybe just drop it in the chat. We can walk through it fairly quickly, actually. Um, we did have that large bill come through in the last several weeks, really, last month. And there is really a lot in that bill, in the law. But how things play out for law firms is actually pretty minimal. There's a couple of key areas that we wanted to speak about. But overall, a lot of the changes, like changes to green energy, probably not going to affect the folks in this room that much right now. And that's where you see a lot of things, or like the changes to how tips are taxed. That's a big deal, but probably not that big to the folks in this room. And so we had maybe 3, 4 key areas we wanted to touch on briefly. One is the qualified business income deduction. That's been a big deal for really any small business owner since really the 2018 tax law changes first came out. So that deduction is now permanent. There was some discussion about what percentage that should be at. Initially, it's been at a 20%, and there was discussion about maybe we'll increase it, et cetera. It's still at 20%. So if you're making 100 grand a year, that deduction is 20,000. 100,000 of profit, then the deduction is 20,000. The problem that attorneys run into is the same problem that accountants run into, is that certain industries don't necessarily see that full 20%. Consulting, healthcare, law firms, accounting firms, there's a few others in that bucket where we start to get phased out of that deduction as our income goes up. And so that didn't really change that much with this new law, other than there's actually even more income restrictions. So there were some changes, but probably how it impacts you, probably not much. It's probably status quo there. Bonus depreciation is now at 100%. Probably don't see this too much, but for folks that are looking to buy or expand brick and mortar operations, there's a little bit more favorable expensing of the cost of your building and your property, just depending on how you do more things on the back end. What we were running into is folks would spend a lot of money on getting a new office space, but then the actual amount of deductions they could take in a current year for that office space were being kind of limited. So that's really been expanded with the new law changes. So for those of you who are like Agate, operating online, maybe not that big of a deal, but for those that are invested in real estate or have brick and mortar operations for one or more locations of your firm, this could be of interest to you. We know a lot of people are developing legal tech. We have some clients that are doing the same thing. So very favorably, research and development expenses that your software company is incurring are yet again fully deductible. That was paused for a good while, and there was, I won't get into all the details, but there were some big issues around that. Lots of questions and lots of unfavorable answers for tech companies. But that's really been addressed, and I think correctly, certainly favorably, but I think also correctly for full expensing. So if you're developing legal tech or really any kind of tech, your ability to deduct cost has been really helped here with the new law. And then lastly, and this is also really nice, but maybe not that big of a deal either, is the expansion of the state and local income tax deduction on your personal tax returns. So that has been a source of contention for the last several years, starting in 2018 with the Tax Cuts and Jobs Act, is that state and local income tax deductions like your personal property tax, your car tag, and especially your state income taxes, they were all combined and capped at a $10,000 per personal tax return amount. And for a lot of people, this was a real big problem. As you can imagine, you might spend $50,000, $60,000 a year in state income taxes and personal property taxes and property taxes, real estate taxes. And so to have a lot of that just basically kicked out of your deductions was pretty massive. So that has been, that ceiling is still there. There is still a cap on the amount of taxes that you can deduct under, we call it SALT, state and local tax, SALT deductions. But it goes up from 10,000 to 40,000. You're like, oh, wow, a $30,000 tax deduction potentially available to me. But then that's also now limited based on income. So it's a phase out, not a cliff. But once you start getting income above a certain threshold, I believe it's $250 for personal filers, $500 for joint filers, you're starting to see that 40,000 come down. Well, it's 38,000, it's 37,000. So like it comes down and to the point that it goes away entirely and you're back to the 10,000. So it's really more of a benefit for middle income earners. And of course, it depends on what your federal tax rate is. If your marginal federal tax rate is the highest, 37%, maybe your maximum benefit for that additional $30,000 deduction is maybe like 11,000. And some states might not tax you at all, and some states might add state taxes back. So whether you get a state income tax benefit is another discussion. So there's a lot that was talked about leading up to the passage of this bill, but at the end of the day, for only some people, maybe they'll see like another 10,000, 11,000 or so of federal tax savings. There may be more or less than that, depending on everybody's personal tax situation. So I kind of went through those pretty quickly. There's certainly a lot of other provisions in the new law, but those are the ones that kind of I think stand out for law firm runners, and be happy to answer any questions about those.
Awesome. I have one.
Yeah.
And then definitely want other people who have questions to chime in. On the R&D stuff, I know that's like generally something that tech companies take advantage of. For a law firm, what qualifies as R&D? Like if you are building like something like an internal tool, maybe not something that you plan on selling, but something that you're just planning on using to speed up your own processes. Does that qualify? Is that something you can deduct? Yeah, I guess maybe, I guess fully now it's changed from something you can deduct over time to something you can deduct fully in that year. So is that, I guess, covered?
Yeah, that's a really interesting question. So, it depends on what your activity is and what your end goal is. So, if you're looking to develop something to probably sell to your peers, you are probably have a separate legal entity. You might have separate ownership apart from your law firm. You may be taking VC money, you may be taking other sources of, external money, different ownership structure. It's very different. So, you've got that option. You also might just be testing out something internally. Maybe you have a platform like it's customizable, right? Maybe it's based on, like built on Salesforce or something like that for your practice management solution or other types of solutions. So you might not be necessarily developing your own platform, but you might be having to significantly customize the platform that someone else is building for you or has offered to you. So there's a few ways that sort of research and development can look for you. In addition to being able to expense most, or maybe all of your activities, there's also a tax credit that goes along. There's a federal tax credit and possibly state tax credits. There's tons and tons of tax incentives around these types of activities and have been for a long time. So the federal tax credit is one of them. And it's a small portion, but can be meaningful of your US-based expenditures, whether you're doing that internally to clarify and refine an off-the-shelf kind of software, or if you're developing something from scratch in a separate legal entity. There's also sometimes state level tax credits. For instance, if anybody happens to be in Georgia, but I know a few other states do this, we have something called the retraining credit. And so when you bring in new tools and you get your team trained up on these things, you can take a percentage of their salary and get a tax credit for that. And overall, tax credits are lovely. They're a dollar for dollar reduction in your tax liability as opposed to deductions, tax deductions that reduce your taxable income and then taxes are applied to that. So there's a few different ways that can look. I'm not sure if that answered your question though, Brian.
No, it does. And I wasn't even thinking about the tax credit part, but that's obviously way bigger or way more, like you said, way more beneficial. So uh, interesting for me to look at both from my own practice and then the Hay Council perspective. So helpful. Thank you.
Yeah, for sure. Any other questions on the new tax rules? Good, because that's all I know about them.
Don't be shy if you have any questions about anything.
Oh yeah, it doesn't have to be that, anything at all. If it has a dollar sign in front of it, we know it or we'll make it up.
Yeah, I do have a question. Would you mind talking about S corporation, S corp selection tax advantage, and is any new rule on that?
Good question, Lena. Yeah, happy to talk about that. We see tons and tons of S corporations. Some of them are so very helpful for our clients, and a lot of them are just annoying and costly and get in the way. I'm not seeing anything in the new tax law that makes S corporations less or more attractive than they've been before. I think the new tax rules were definitely meant to expand U.S. companies spending money in the U.S., but not necessarily pro or against any type of entity type. So S corporations are kind of, I think, on the same footing they have been before. I think the what we do see quite a bit though is that there's a lot of miseducation or lack of education around how S corporations can save small business owners self-employment taxes, their pros and their cons, because they absolutely have downsides. And so a lot of that gets missed in general tax discussions or industry tax discussions. And so we see a lot of folks start their firms and they just make an S corporation election from day one without any thought to the administrative hassle, the administrative cost, the fact that S corporations will not scale. They are not flexible tax structures. If you are adding on new partners, if you are developing software, if you are buying buildings, they are just very, very single use type of tax structures that are inflexible, but they can be quite powerful, but they need the right rate setting. So that's a lot of exposition. Lena, do you have specific questions about S corporations?
I see. Thank you so much for all this explanation. So, um, you are saying if there could be a pros, right? So if you do it right or in for a particular setting, then it could be tax saving, right? Just depends on the different way of doing things. Um, I guess I don't know whether you have this hard number, like if your income revenue, gross revenue achieve so much, definitely will be savings by doing S Corp.
That's a good question. I would say we try to shy away from rule of thumb on revenue or profit because what happens is folks get anchored to that and they think if I just make more money, I need an S corporation when really it's facts and circumstances. There's so many other points that go into whether an S corporation is an ideal tax structure for your firm, that if we focus on, oh, well, you just need to make 100,000, 200,000, a million, whatever it is, then folks will gravitate towards S corporations, even though those are not the right structure at all. For instance, if you were developing legal tech, I would never tell you to be in an S corporation to do that. That's a horrible. That's like malpractice. That's advice is so bad. So I'm concerned if I tell somebody, oh, just 200,000 of profit, there you go. S corporation is a no-brainer. They'll be tied to anchor to something that is not necessarily helpful. So I would say the big benefit of S corporations is they avoid and minimize. Minimize is a better word. S corporations minimize self-employment taxes. So like when you used to get a W-2 and the W-2 would have Social Security withholding and Medicare withholding, that's the type of tax that S corporations help minimize. And that's really 99% of what S corporations are good for. And they are bad for a lot of other reasons. So you need to make sure that all the reasons that they won't work are not in your fact pattern before you go and even explore if that self-employment tax savings is suitable for you, because it also comes with needing to file an S corporation tax return, needing to run payroll for yourself, because now as the owner of an S corporation, you're also the employee of your own S corporation. And if you had no other employees, you might not need payroll at all. So now you need a good set of accounting records where maybe you used to get by with Excel. So there's a lot of drawbacks to it. So that's a really long way to say, Lena, no, I don't have a specific specific number that I would throw out.
Right.
So it
Thank you.
depends. Yes, William.
Thank you very much.
Yes, of course, you're so welcome. William, yeah.
Some part back behind.
Yeah, my question is kind of this. So, as attorneys, we basically at times need a sounding board either for our own law firms and/or for clients, especially when it basically comes down to the type of business to form or a situation that's out there. Do you guys provide sort of that service? And if so, generally, how does that go? I mean, is it like we call you up and we basically ask the questions, you bill us by the hour, or what?
That's a good question. While I'm answering that, Sarah, do you have our Tax 101 guide we can throw in the chat?
Yeah, I can find it.
Yeah. So since we are not attorneys, we don't advise on legal structure. So if you need to be a corporation versus a partnership versus an LLC, we don't advise on that. But we work with your corporate counsel, which for some of you might be yourselves, if that's what you do daily anyway, to help understand what the tax ramifications are. So for instance, if you want to have an S Corp, you can't start out as a partnership. Well, you could. I mean, you need an
You
LLC.
could, yeah, no. So we're kind of,
Right.
I'm kind of assuming like, hey, I need a model on the ramifications of these variety of different structures. We're thinking about this. Can you do a model for us? That's what I'm
You know
thinking.
what? That's a really good question, and we can. We typically find it's not necessary. What we
Okay.
typically find is that if you're doing a certain thing, there's some tax structures that just everyone knows will work for you or won't work for you. When you start adding entities, even like sometimes it's pretty obvious, you might just have one S Corp in your structure and the rest of everything is maybe a combination of C Corps and partnerships, for example. So sometimes these questions sort of answer themselves as you better that relationship develops and you better understand, like we better understand what a client's end goal is. As far as like whether to be an S corporation or not, typically what we do as clients are coming to us who are not S corporations, we like to see it run. So we like to see your firm run 6 months, 12 months, gosh, even 24 months. It really just depends. And we like to see a steady history of activity, a steady history of profit, a steady history of ownership structure, right? We want to make sure, because S corporations are so rigid and they're inflexible and don't really allow you to undo them relatively easily like other structures might. We want to make sure that we see things play out before we advise you that this is a really good idea for you. So once we get to that point, we can absolutely model it and we can say, okay, we've kind of ruled out all the reasons we don't want to do this. This would make sense for you. And here's either the tax savings net of cost, or here's like how much it might actually cost you to run the structure, because it's just an inefficient one for you. So yes, to your point, yes, we can model those things out. Typically, we just find it's not necessary.
Yeah, I mean, luckily, as attorneys, we're pretty good at handling the administrative portions of those things for our own practices in terms of the cost there. I think, the focus is on really the ramifications that are out there, especially when you're dealing with something like someone doing a merger and/or acquisition. So I think that's where I would be looking for your services as well. So thank you.
Of course, of course. Something juicy? Anybody?
So I guess if we're okay to circle back to the S Corp thing, because I'm still trying to understand, like, what would be an ideal, like, company that you think would set up as an S Corp?
That's a great question. I kind of said, here's what wouldn't work. So S corporations, their history, they're very old. They're decades and decades old. And they really are meant for operating entities. They are meant for people like you, people like me, who do work and get paid for that work, which sounds like duh, but like real estate companies, they're not like if you have a real estate investment, it's not doing work, it's a real estate property. putting money in the stock market, not doing work. So really operating entities are ideal for S corporations. Businesses that you don't want to scale. If you want to IPO one day, that's not going to work, right? It doesn't work that way. So if you think I'm going to grow this firm and I'm going to have 10 partners, you probably don't want an S corporation because it's going to be very rigid on how you can take cash out. You will have to take it out in accordance to your ownership percentages, and most firms do not want to run that way. Even if you're not in a true book of business model, most firms do not want a partner. Most companies don't want a partner who didn't do their fair share to get a distribution in accordance with their ownership. They want something to counteract that. There is a mechanism for S corps, but not a good mechanism for S corps to handle that. So, one owner, maybe two owner, you get more than that, or you plan to have more than that, that's not looking great. So you've got operating entities, maybe one or two owners, some steady history of growth and earnings. As the discussion I was having with Lena, like, I don't have a good number, but I know it's not low. I know if you're going to start out with 0 clients, you don't need an S corp from day one. That's a waste of your time and money. With some exceptions, and the exceptions typically come in at states. So if you're running, for instance, in a state that requires you to be a corporate entity for legal purposes, well, now you have to be an S corp or a C corp. C corp probably is not going to make sense for you. So that would be another type of firm that would be suitable probably for an S corporation, and even from day one, and we do have those. But sometimes you have states that are kind of the opposite, where you have more flexibility over your legal structure. And if you look at corporate forms like S corporations, they're really detrimental. They have high state taxes, and a non-corporate structure might not have those state level taxes at all. So operating entity is moving along at a good clip. 1, 2 owners, maybe. The state tax situation is favorable for it. There's probably a few other things, and also the owner's appetite for administrative complexity, because now it needs its own tax return. Now it needs its own payroll, et cetera, et cetera. Some of our clients are like, yeah, bring that on. It's fine. Y'all are helping manage. I don't mind. That's fine. I'll pay for it. And some folks are like, no, I've already got enough on my plate. Everybody's different. Does that help?
I guess, yeah, related to that. So I know that, so I'm a solo, no employees. And so I feel like it might be a good fit. But my other question related to that is, how do you determine what a reasonable salary is as an attorney? Like, is it pretty much what I'm billing, or like, I've seen a lot of guidance out there that goes both ways, and I can't tell what the answer is.
It's hard to tell what the answer is because there's not clear guidance from the IRS or from tax rules. You're supposed to take salary that's reasonable. That's the word, reasonable. And there's case law, there's tax court cases, et cetera, around what is reasonable, but there's not a bright line test for it. So there's a lot of factors that come out of those court cases. We put those together. There's even software out there that will help you identify what reasonable is. We can help with that. That's part of what we do for our clients. I would say one of my go-to moves is replacement cost, because that is almost always going to be reasonable. If you had to replace yourself with another attorney, what could they bring in? What could they generate? So what would you have to pay them to come in and bring that in? Like that's going to be reasonable right there. And then the kicker is, though, it's not just about reasonable too. Like, if, for example, if you want to make retirement plan contributions, those are typically based on your salary. They're capped at a percentage of your salary. So you may even want your wages to be higher than what reasonable is. Or, there's a little bit of nuance in there. But the reason you're finding it hard to determine what that number is because it can be hard to determine because there's not clear guidance.
Makes sense.
I'm not giving you answers. I'm just
We want numbers.
Come back to us, Taylor. We can one-on-one. We're happy to help you
will.
figure a reasonable comp.
I absolutely will. Yeah, because the admin side it becomes easier and easier, I feel like, every year. I mean, Gusto practically runs itself for payroll and that sort of thing. And so, like, I don't feel like it's that much of a, especially since like by myself, it's really just me. It's not like I'm having to deal with, the admin burden of 5, 10 employees. So I'm just trying to kind of, and talking to someone like you would make the most sense, I think.
We're happy to point people away from a bad road.
Yep.
Allison, I feel like a lot of your you have like a lot of scar tissue probably because lawyers will start as an S corp and then get hit a block where they bring you all in and they're like, what do we do? And you're like, well, you should never have been an S corp to begin with because you can't add this like these partners and you can't go in the direction you want to go in, and now we have to unwind this S corp. But I mean, I imagine there's plenty of lawyers on our platform who really are embracing sort of like the solo partner path and want to do that, and therefore and aren't interested in building like legal tech or something like that. So it probably is a good fit for people. You're just saying be cautious in jumping to the S corp path, right?
Yeah, I would say rather than scars on our part, it's more like our clients often just never quite grasp the situation they're in. Like they come to us, they've already made the S election, they're already on this path, and then we're like, okay, well, we can help you get set up with payroll. And they're like, wait, I have to have a salary? Like, yeah, we can help you get your books together. Well, why do I need books? Well, because now you have this tax return over here that requires a full set of financial statements reported on it. And they don't know that this is about to happen. And then they get very, sometimes, not all the time, but sometimes quite frustrated, right? Because that wasn't part of the sales pitch they heard on social media or wherever, was sort of that really boring and obnoxious and expensive side of like maintaining all this. And so, and then further, they never really ask us, and we don't really go back and say, hey, we could run it both ways and see how much money you're actually saving. And sometimes, we do that on the front end before folks make the S selection, but we've never, I don't think, ever done that on the back end. But I think we find quite a few clients really just are not saving much, if anything, and it's more hassle than it's worth. But there's not a connection for them necessarily between the hassle of running the S corp and the what they're feeling, right? Like we try to explain, but the social media message is just, or cocktail party tax advice, that messaging is so powerful. It's often really hard for folks to wrap around, like, oh, this would have been easier if I had not done this. Oh, I get it.
Yeah.
So sorry, just want to ask a follow-up question based on the point that Brian and Taylor made. So say, for example, later on down the path, I realize, okay, S Corp is not ideal and we want to switch to different one. Because S Corp is essentially we build up as a LLC, so legal structure is still LLC. The only thing is when you select tax, you select S Corp, that pass. So if in case, say, next year I find out, wow, it's not great, it's whatever it is, at that point, I can then select to a different tax setting. Is that how it works?
No.
Okay, so tell us how it works.
Yeah, if you decide that you do not want an S corporation structure, you can. It's not easy to undo. In theory, you can undo it, but it's not something you can switch and flip back every year or so. So once you have, first you need to understand there can be a negative tax implication for undoing your S corporation structure. So that's one step that would need to be addressed. And then the second step is to know that when you decide I don't need to be an S corp, if you later want to be an S corp again for the same entity that you have 5 years. You have to wait until you can do it again. And so what we find is that for folks where undoing an S corporation is probably their best bet, it's generally the most straightforward, but the nastiest approach is to actually create a new legal entity. New tax ID, new bank accounts, new every single thing. So that's another reason we really, really hesitate to get people into S corporations, because they aren't just, we'll just uncheck that box. It's like you can't unring that bell. You can't unboil that egg. It kind of is what it is for the foreseeable future.
So the reason you want to do new thing is because of potential negative tax consequences. That's why you cannot continue with LLC you already set up. Is that case?
I don't think I followed that. Would you ask that again, please?
Sure, sure. I mean, my understanding about S Corp is not a legal entity structure, it's a tax structure.
Correct.
So if the next year I want to change to a different tax structure, my legal entity LLC can still remain unless you think, well, there may be negative tax consequence come with my existing legal entity LLC. That's when you say, well, it's better just wipe everything out and set up another LLC. Is that what you meant?
Yeah, to your point, if you change your tax type, that doesn't change your underlying legal structure.
Right. So that's okay. Because my understanding is S corp treatment. Maybe that's where, oh, I see why. I may have not made clear. When I say S corp, I meant my entity is set up as LLC. So LLC has two ways of doing tax. It could also be just flow through, right? The second way of doing it is choose to be treated as S corp. So my question to you is, say the next year I choose not to be taxed as S corp. Instead, I choose to be going the flow through normal way. Can I do that quickly? Just switch. Okay, I don't want to be treated as S corp for next year. Can I do that and still retaining my current LLC legal structure?
There is not a clear IRS approved method for doing that easily, but we do have some colleagues who do have some luck with some clients doing that. My thought would be, if you think that's going to happen, just don't make an S corporation election to begin with. Like,
Right.
I would try to prevent that on the front end and wait until you felt really confident about being treated like an S corporation before you went to that trouble. And then you don't have that situation to undo.
Right, because for us, the profit can vary different years. So, but anyway, I got your point. All right, thank you very
Yeah.
much. Appreciate it.
I think Jory had a question. May have
I
been.
did. I got a new paralegal here, Brian. So
Amazing.
so I went off camera. But
What's his rate?
what's your rate, buddy? Huh? Yeah.
Might need some extra help as well. So
They get pretty expensive, in case you're wondering. Got to raise the rates for these guys. But anyway, I was wondering, Allison, if you have run into kind of like solo 401k issues as part of the S corp. I mean, I do operate as an S corp. I set up the kind of like trustee plan through my solo 401k, and I kind of contribute everything mostly outside of payroll except the employee part. But I'm kind of wondering if you've run into tax issues, from people kind of setting up the solo plans.
I have some thoughts, but can you give me for instance, before I start answering a question that really wasn't your question?
Oh yeah, no problem. So like, right, for instance, I think one of the things that I try and do is get as close to like the maximum annual as possible, right? So you have your 23 or whatever from the employee, which you can do as part of an S corp payroll, and then you can sort of do employer matching or contribution or whatever you want to call it, profit share to 25% of your reasonable salary, as I understood it.
Yep.
Sorry. Or nanny out today. Or right up to the limit, but limited by your income. But I'm kind of wondering, like, if people ever go astray as S corps trying to manage this, because it's like I'm sort of self-managing it, and it is a little complex.
We see a few issues. To your point, you do have to remember all the rules. And those rules don't change too often, or they haven't changed in a while. Although I say that, and this year there's some really weird catch-up 401k rule if you're in between the ages of 60 and 63. So sometimes the rules can be a little challenging to keep in touch with. Being your own plan administrator is super tough. We do 401k plan administration, or we work with a third-party administrator. We help clients make selections and do things there. And even us staying on top of that can be challenging, and that's our job. And we see a lot of times, since we're talking about S corporations, folks will, be an S corporation to save self-employment taxes, but then they want to max out their 401k. And to your point, Jordy, you need a higher salary if you want to hit that 25% employer match. And so you do that, and then that means you need to keep increasing your salary, but the more you increase your salary, the more FICA, Social Security, and Medicare taxes you have,
Right.
less beneficial the S corporation is to you in the first place. So this is kind of going back to the beginning of our conversation about what makes for a good S corporation. Someone who is a solo and looking to make very high retirement plan contributions, that lends itself more towards not being an S corporation, especially without payroll, because they might have very little self-employment tax benefit by the time they get their salary up high enough to get to the 401k contributions that they're looking for. So we do run into that where it's just like bad tax entity structure with respect to the owner's goals, financial planning goals.
Right. Mostly from like the 25% limitation and how that interacts with a reasonable salary.
Yeah, because
Okay.
those rules are the same whether you're an S corporation or whether like you're a sole proprietor or a single member LLC. Those don't change, so you can still do that employer side, even though there's not necessarily a separate legal and a separate tax entity. So you can still get the same level of contribution you're looking for if you're trying to max out, without needing to kind of play around with your wages.
Thank you.
Yeah, did that help at all?
Yeah. But it seems like, I guess that the issues I were thinking of are also the issues you were thinking of. So that's great. Thank you.
Yeah, for sure. Trying to think if there's any other related issues that we see on the retirement plan side. I can't think of any. Can you, Sarah?
Can't think of any issues, but one of the nice pieces about a solo 401k is that if your spouse is working in the business, they can still contribute. You can still keep that solo plan and they can contribute versus if you bring on a true employee, then you're in a different plan situation.
Or what about kids? Now there's the new
You got a kid on payroll, it looks like right now, so.
When school is out and your nanny's out, you can do anything. Thank you guys. That's super helpful.
For sure.
Yeah.
All right, we got a few more minutes if anyone has any burning questions.
The spicier, the better.
Doesn't even have to be tax advice. It could be marital advice. It could be raising your kids advice.
Just bring it. We'll crowdsource it.
Do you two want to talk a little bit about how you run your shop and the services you provide and sort of like the types of customers you work with? Obviously, very law firm specific, but figured since there's some people who don't know who you are, maybe you can give a little overview and then we can give people their Friday back.
For sure. We'll make it quick. So we are CPAs and financial planners. Our core services are accounting, which you will need if you're an S corporation, tax strategy, tax return preparation, and we're also, like I said, we're financial planners. So we do a lot of investment planning, estate planning assistance, helping with insurance, retirement planning. We just are really passionate about helping people grow their small business. We're small business owners too. And so we really like connecting with folks. We work a ton in the legal industry. We're familiar with legal tech stack. We're familiar with legal accounting, how a lot of law firms are structured, multiple owners, multiple entities. And we just really like working with attorneys.
All right. Well, thanks so much. Love doing these things, and we'll try to round the year out when we're all getting hopefully ready for tax season by the end of the year. We'll have you back on and we'll do this all over again. And always appreciate seeing you too. So thanks so much.
Yes. Thank you, Brian. Thank you, Hey
Thanks,
Council.
Brian. Thank you, everyone.
Bye bye.
Bye,
Thank
sweetie.
you, Allison.